Just like gas prices, inflation is taking a toll on the housing market. In St. George, real estate companies went from not being able to keep up with the demand to a rapid increase in interest rates. This has forced the market to slow down dramatically, leaving many of these homes still on the market.
It's crazy. We went from the most aggressive seller's market in the history of the United States and then we've had the second most dramatic shift in the real estate industry to now we are in a full-blown buyer's market, all within a few months.
The average priced home in the St. George area is about $661,000. This home in the Washington Fields area is listed at $750,000 and has already been lowered once since it was listed. Evans has been in the real estate business for the past 13 years and says the link to the fast shift in the housing market is due to the federal government's response to inflation. She says interest rates went up too high too quickly.
They should have just been easing that up over a few years, but instead it was all within a period of about 6 months. So that gave a lot of pause to a lot of people. It actually pulled 43% of the buyers out of the market. They just can't afford it. They can't move forward. And then for the rest, it's given them pause because it was such a dramatic turn that people are nervous, and understandably so.
Tyler Slesk manages a mortgage lending company in St. George. He's also seen a dramatic change in the lending market. The amount of money a couple may have qualified for a loan on a house this past summer is not affordable to them now.
People's buying power just really diminished, during those 6 to 8 months, where people were qualified up to $750,000 and now qualified up to $500,000 because of where those interest rates are. So that buying power was really diminished over the last 6 to 8 months, and it's taking its toll on first-time home buyers, and there's even people that are couples, one of them is going out to get a job so that they can qualify for a home. So it is really taxing on families right now.
Slesk said many people are having to wait on their potential purchases.
Sometimes the answer is, yeah, we need to wait. We need to save up a little bit and maybe wait for these interest rates or these prices to come down so that it's just a little bit more affordable. We don't want to send somebody out there when they can't go out to dinner with their family, once a month, right? We want them to be able to enjoy their lives as well, and so we don't want to max out that debt to income.
Builders are also feeling this shift, and many are choosing to slow down on building spec homes using lines of credit.
A lot of builders are, okay, we have the permits for these, it's ready to lay the slab, the foundation, and so we're going to continue with that, but we're going to hold off on new build jobs. And so I think that we're seeing people start to slow in that building, and so if we do see an uptick in buyer interest in the spring, I think that a lot of that inventory is going to get eaten up pretty quick.
However, the market shift doesn't mean that buyers don't have the upper hand.
For the first time, we all of a sudden see sellers paying closing costs. That's huge. You can buy down the interest rate. The seller will help you buy that down, lock you in at a lower interest rate. They can help cover the cost of getting a loan. Sellers are willing to do that now. So we can negotiate pricing, we can negotiate terms, we can negotiate dates, whereas before you were competing against 15 other people. And if you didn't have cash, you were out.
Real estate agents will no doubt be looking at hosting these homes on the market longer, and some sellers may even take them off the market if the price offered is too low. However, for many, the market still allows for a good margin of profit.
Sellers, unless you just bought recently, you should still have a ton of equity because we inflated so high. So it's still a great market, and quite frankly, we're still buying and selling.
Slesk says potential home buyers will have to weigh out their own circumstances.
There are a lot of great programs, low down payment programs, even no down payment programs. But are you willing to pay, the premium for that monthly payment rather than rent? And I think that it depends on that client or that prospective buyer. It depends on their, like I said, their lifestyle.
And while interest rates may seem high now, one only has to go back about 30 years to remember interest rates in the double digits.
you probably remember, like I do, in the 80s, interest rates up in 17, 18%. I was so happy when we refinanced our home at 9%. So this is reality, but it's not reality for millennials. They only know 1% and 2% and 3% interest rates. So this just seems downright criminal.
Evans said real estate predictions for 2023 are that interest rates will continue to follow the trend of the rising inflation rates.
Now we went from 2% and 3% interest rates to 6% and 7% interest rates, and it looks like we might go as high as 11. I have heard some reports as high as 9 in other reports. It's hard to say. So to me, I feel like get in while the getting's good, because if it goes higher, you're going to be patting yourself on the back for getting in when it was only 7.2 rather than 8.3 or wherever it's going.
In Washington County, Melissa Anderson, Community Education News.